Good evening and welcome to the Australian Stock Market Show. The All Ordinaries Index finished 2024 in a very bullish manner. So will this strong run continue into 2024? Well, that's what we'll help you with each and every week. Now tonight we aim to help you make sense of the current market as we give you our take on the Australian stock market. For our main topic in tonight's show, we get into the big bangs. Is now the time to buy or is it time to sell ANZ, CBA, Westpac and National Australia Bank? Well, we'll get into that later. First up, we'll share our hot stock tip for the week. So sit back and relax. Tonight is jam-packed as we have lots of emails to answer. We'll also take your phone calls and give you the answers to some of the important questions around the stock market. Welcome back. We do hope you had a great holiday and that Santa was really generous to you. Now we're excited about the market for this year. We've had some great stocks that we'll give you our thoughts on, including the big four banks ANZ, CBA, Westpac and NAB, along with ResMed, Santos, S32 and more. Now before we get too far into it, we are super excited to show you our new studio, our new set and our new lineup for this year. This is just the start of many new things that you'll see from us at Wealth Within and here on the live Australian Stock Market Show. I'm Dale Gillham and I'm your host for tonight. And joining me is Janine Cox and we're Australia's most trusted stock market educators. Janine, welcome back. I've missed you.
Thank you so much and I've missed you as well. Between relaxing, watching a few movies, having lots of ice cream.
Relaxing.
Little walking.
But first show for the year, well, I'm excited about it, but to me, I think there's some more exciting news that we've got. As we said a little bit earlier, it's a new lineup this year. Now, Pedro's going to be coming back. He's just in Sydney working. But this year, we've got a new person on our show. Well, a new old person. This is the third time he's worked with us over the years.
It's exciting having him back.
It is. He's a gentleman called Phil Tatevsky, and I'll introduce him in a second. Now, Phil, you've worked for us, this is the third time. You started our course in the mid-2000s. You became an assessor, you left to go and trade, and then you became a portfolio manager. Then you came back to be another assessor with us again. Then you left and became a portfolio manager again, and you've been trading full-time for well over 5 years. So welcome to the show. You've well and truly earned your seat sitting there.
Thanks for having me. It's good to be back. I'm surprised you're not sick of me by now, coming in and out so many times. But look, very excited to be on the show, and you've got a beautiful studio here. I know we've spoken for how long that we're going to get together and do something like this, and we're finally here. It's the first time I've had to wear makeup in my life, so that's a new experience. I'm sure my wife's going to.
Oh, it is, and you're in a suit for a change.
Yes. I haven't worn this suit for 2 years, so I have to pre-warn the viewers that if they hear a tearing sound, it's probably
breaking out.
It's probably me underestimating how much weight I put on. You know, my daughter, she's 2 years old, and she calls me big fella. And I thought it was funny at the start, but now I think she's onto something.
Well, that's one of the downsides of trading full-time. The Tim Tams are not too far away.
Exactly.
You tend to put on a bit more weight because you're sitting down. But it's great to have you on board. And there's going to be some exciting stuff we're going to do this year with you right here on the live Australian Stock Market Show. But tonight, as I mentioned just a minute ago, we'll get into the bank stocks. So stay tuned as we will get into that and more very, very soon. But first up, we do need to get into this week's hot stock tips. So Janine, what have you got for us tonight?
Well, the hot stock tonight is GMD, Genesis, and Phil's going to talk about Genesis tonight, aren't you, Phil?
I am, yes. First cab off the rank, GMD. And look, if we bring it to the market index, we can see here that Genesis Minerals Limited, it's an Australian gold producer. It's mine development companies with projects mainly located in the premier gold districts of Western Australia. Look, some key performance statistics on this one. It's had a fantastic year, up 24%. It's performed very well as well versus the sector, up 29%. This stock's got about a $1.8 billion market cap. What's interesting about this stock is that it is ranked outside the top 200. So this is probably one of those stocks that not many people are looking at. I know a lot of institutions are probably not looking at this stock as it's not in their mandate. So look, a really interesting stock. I think if we get into the chart, we can have a good look and see what's happening here.
All right, well, let's bring up the chart and look at the technical side of it.
Yeah, it's an interesting stock, isn't it? I mean, just from the volatility point of view.
Yeah, and I mean, look, the chart's up now, and the good thing about this stock is that this particular chart here gives you a perfect example of the life cycle of a stock. You know, it started off in around 2008, and you can see that it's had huge volatility. It's gapped around everywhere, and mind you, we're on the monthly chart here. So all those signs point to this stock being quite illiquid in its early days, and you can see from around 2016 the stocks start to settle down, opens and closes are a lot tighter together, and you know, having a nice stable uptrend. One thing to note is back in September 2001, I believe it is, there's that really huge up bar, and the stock's pretty much been ranging in between that range. So I'm sure that's been some kind of favourable announcement that's happened. But look, if we zoom into price a little closer, we can see that the last couple of months.
So what do traders really need to be thinking about with this one? I mean, is it short term that you'd be looking at this one, or is it more longer term?
Look, just looking at the big picture as we are now with this particular stock, if we zoom into shorter term price action, we can see that, you know, I like that this stock in the last year, it's showing high highs, and you know, all the students there that have done the course know, you know, higher highs and higher lows, what it resembles, you know, and it's been closing above each previous high. So look, it's poised at $2 there, which is obviously a previous level of resistance. It's quite interesting, but I mean, if this stock is to poke its head out above $2, it's blue skies now. So all the way up until the all-time high, which is at $4. So short-term traders, long-term traders, you know, if they're looking at prices around $2, it's almost 100% to $4. So there's a lot of room.
It's
upside.
more a risky proposition though, isn't it? So it's not something that perhaps you would put into a portfolio if you had a, you know, more, you know, if your risk was, you were looking at risk from the point of view of picking bigger stocks and not wanting to have that volatility. But how do people, if they want to trade this stock, when do they actually look at buying it? Because it's right at an important level now.
Absolutely, yeah. That's a great point you say, and I'd be looking at above $2. I'd like to see a bit more, maybe a close above $2, and then see how it reacts around that level, you know, how it's pulling back around $2. That'd be my first port of call, but look, it's a very interesting stock. As you said, it's outside the 200. Most people might not know about it, and I guess that's probably why I'm here on the show, to throw some curveballs out.
Short-term perspective on
You're
it.
the short-term specialist on the show, so that's what we got you here for. But that is it for our weekly hot stock tip. Now, shortly we're going to get into our topic for the night. But before we do, right now, it's your opportunity to get involved in the show and have your questions answered. Now, remember, we do prioritise phone callers, so pick up your phone now and call 0392909988. That's 03 for Melbourne, 92909988. Or you can text your question to the number on the screen. Now, the first caller into the show right now will get a free copy of my book, Accelerate Your Wealth. So pick up your phone and dial 03 92909988. Now, while you do that, whilst tonight is the third Tuesday in the month, we're actually going to break from our normal routine and take a look at the Australian market, so let's get into it.
All right, on your screen right now is a list of, well, it's a bar chart actually, of the All Ordinaries Index there. And you can see there that we've had the market go up so strongly to that prior high, this high in January 2022. A bit of a reversal this month though, so it's starting to trade down, but you'd expect that because the All Ordinaries doesn't just go straight up in a straight line. It'd be nice if it did. On occasion it does go pretty vertical, as we saw out of COVID and prior to the COVID peak. That was back in 2020, just before the big correction that we saw there. Same sort of volatility came up into the high. Are we expecting another move up through that all-time high? And the answer is absolutely yes. And this is something for investors to get really excited about, because we've just seen this move that to us in December signifies a change in the whole market in Australia. And that means that some of the big stocks on our market, even though they're having a little bit of a pullback, some of them at the moment, particularly the miners, we will see that push through. But what I wanted to show you quickly was I've hidden something under here. Now this actually, is an overlay of the financial sector on the All Ordinaries Index. You can see this blue line here. It's showing you the dominance of the financials in the market and how the market shape actually really reflects what's happening in that space at the moment. And I wanted to compare that to materials to show you that at times the materials sector just outpaces the financials, or the financials outpaces the materials sector. And we can see that particularly if you look back over the past couple of years, particularly in 2014, we had the Royal Commission and the financials pulled back, but the green line is actually showing you the materials correcting down. We had this major long-term correction like you wouldn't believe, something that when I saw it myself I was just so excited about it, because it means that in theory materials should be long-term bullish out of that low. I mean, even if we do see a decent pullback in a few years' time, it still means that ongoing from that material stocks should be really great from a long-term investor's point of view. So, but as I said, sometimes the financials will be moving in sync with the materials, and at times they'll move out of sync, and we see when we get a sideways market we could have one sector going up and then another sector pulling back, so therefore you get a sort of a flattening out or levelling out.
Okay, I want to know from both of you where you think the All Ords is going to be at the end of this year.
Oh, it's going to be high, new all-time high, and we're going to be at least...
Have you got a price for us?
A price? Oh, no, you've got a price target.
I'm not telling you, I'm keeping mine secret.
Oh, I think it's going to be at least 10%, if not 15%
At least 10% this year, because it went over just over 8% last year, even after a real crappy middle part of the year when it took off in January.
Through the all-time high, I'm talking as a measure through the all-time high.
At least 10%. What are you talking about, Phil?
Look, I'm looking at this and seeing how the market's accumulated or gone sideways for the best part of 2 years. So any move out now, and it's looking like it's definitely bullish. So 20% plus is not out of the spectrum, you know.
Okay, minimum target 10%, top end target around 20%. So there you go. And we're liking some sectors in the market.
We do.
Which we're going to talk about next week, aren't we?
Well, we'll talk about sectors later in the show as well, in the topic.
Oh, yes, we are.
Which is really interesting.
We're going to talk about a few sectors later on in the topic. Well, that is it for our thoughts on the Australian stock market. Now, before we get into our first email, remember, to get your questions answered live on air, you'll need to text or call into the show. You can also send your questions to info@wealthwithin.com.au and we'll answer them in next week's show. Now, let's get into our first question. Our first email is from Gerard, who says, "Hi Janine and Dale, thank you for your Tuesday night show, which I never miss, even working late. I would love to have your thoughts on ResMed. Is it the right time to buy some units of that stock? Please let me know. Kind regards, Gerard." So let's go to that one. ResMed, Janine?
Yeah, this is a stock that we both like, isn't it?
Oh,
and we're keeping a good close eye on this one. You can see on the chart there on the left-hand side that the big decline that we've got, and I'm just going to put a measure on that for you. So measuring from that high down to this low, as soon as we see any stock come back around that sort of order, 40-50%, we're watching it like a hawk, aren't we? And since then, it's been up for 3 months or thereabouts now, which is just a really nice test of that low. So ideally, I'd like to see a little bit of a pullback, but it could keep going up from that level. So look, I would say if we get a really strong rise back above this high here, that was the December peak there at around 26.35, that we could see ResMed keep continuing the move up. Any move back below last week's low, and the low here on the weekly chart, I'll just expand that up a bit so you can see it. Oh, I don't want you to have to get your binoculars out. On that low there, 24.80, if it goes below there, then obviously just wait, because sometimes we can get these moves up, a retest of the low, and that can be sort of a false trigger for traders that can wipe you out of a trade.
Well, I'm really positive on ResMed. I do like it right now, and I'm sure Phil's got some thoughts on it. What do you reckon?
Look, it's interesting because it's had that big congestion period around that 2022 July, and then the capitulation, and generally stocks that they can have that elastic band effect where they fall really hard and shoot on back up, which is what you were alluding to before. Perhaps the pullback, if you wait for a pullback, it might not come. But look, it's doing all the right things on the weekly. It's creating higher highs, higher lows. Volumes picked up over the last year, so right now it's if you're looking at this from the weekly point of view, definitely one to get excited about. And again, you know, like you mentioned, the 50% pullback, that 50% discount, that's entrenched in our minds. Anytime we see that, it's we start licking our lips. And
Well, it sounds to me that you both are talking with, for Gerard, you're saying is yes is the answer to his email.
Sure.
It's now the time to look at ResMed. So thanks, Gerard. But now we have an email from Scott who says, hi guys, just wondering what you think the outlook is for Santos. Thanks, Scott. So I'll go to you, Phil. What's Santos doing?
yeah, look, Santos is an interesting stock. It's been falling naturally from all the way back in 2011, and whilst it's had some moves up, it is quite choppy. I'm not loving the price action on the monthly chart. If we focus on the left here, it's definitely been going sideways from, you know, all the way from April 2001, just chopping up and down in between highs and lows. I'd really like to see a strong move above $9 before I got excited about buying this stock, because for now, all this could be is just a reaction to that huge down move that we've seen from 2014. So probably a bit early for me.
Bit early for you. How about you, Janine?
This is going to be fun, isn't it? I'm waiting for this one. All right, so Santos I happen to like, and you know, like you were saying, you were licking your lips about certain things. I'm enjoying this one more or less because it does trick traders, and that's what you're saying. You're just observing the way that has this erratic sort of move. And when you try to back test this type of stock, it is a bit of a challenge. So if you like a challenge, then you go for Santos. If you just want to sort of take it a bit easier, then you go for more banks and stocks like that. So if we go back to the chart for a minute, I'm actually quite happy for Santos to actually trade through this high here. And the reason being is because it took out these prior lows here and then just reversed straight away. So that's showing, you know, quite significant strength underneath there, underpinning that next rise. So I guess I'm a little bit more aggressive, which might surprise you, Phil.
Well, yeah, I thought the roles were reversed, but look
out.
That's the beauty of it.
Anything can happen on the show.
Yeah, and that's the beauty of it, you know. Two traders can have two completely different opinions, and the good thing is, we both could end up being right depending on where you buy or where I sell.
That's right.
You know?
Exactly. Very good point.
All right, remember to pick up your phone right now and dial 03 9290 9988. I know Janine seriously wants to have a chat with somebody, so pick up your phone and ring 9290 9988. But now it's time we get into our next question for the night, which is from Albert, who says, hi guys, big fan of you guys and subscriber to Talking Wealth. I was wondering, with S32, it shows a 4%-ish dividend return, but the last couple of quarters shows a negative net return. Now, how do they show a return like that with a negative net profit? Kind regards, Albert. Now, Phil, I know you were doing some research on that.
Yes, and you've probably given me a few nightmares, Albert. I used to be an accountant. And it was quite a while ago, and I've probably forgotten most of it. But it's a good question. Look, if you're not an accountant, it's probably one that you're asking, scratching your head, saying, how is this possible? And look, it's got to do with the net profit that companies report. Sometimes they can write off assets, and that can go to their bottom line. And they still might have the cash flow. It might not affect their cash flow. So they might have money in the bank and still positive cash flow in order to be able to pay the dividend. It's just more that accounting side, how they're writing off certain things and reporting it, which can be tricky. But yeah, look, it is possible. It's most definitely something like that.
Yeah, when I looked online, the revenues looked really good. So I was thinking, okay, that's it. You know, there should be some more opportunities in there with S32. And I guess, is the question really, you know, about the concern of the dividend? Is it that this investor is really concerned about whether the dividend will continue? And that could be the question here. So, you know, if you're wanting to get a reliable stock that's going to continue to pay dividends, do you pick up S32 or do you buy something else? That's the question.
Now, I know S32 is on my watch list because I do want to buy that again. It's went up about 8%, I believe, last week from memory, coming off a bottom, but it still hasn't proven to me that it stopped falling yet. So, to me, some of that information is relevant because obviously we want to see it profitable and see it growing, and obviously it's in an area that we believe could be growing over the next year or at least the next few years anyway. So time to buy or time to just sit it on your watch list still?
Look, I'm looking at this. I mean, if we just focus in on the monthly chart on the left, like you said, it's had that nice run up, but now it's looking to close back down near the lows. So that's not too positive for the stock. But I mean, look, it's had, again, it's one of those stocks that's had almost a 50% pullback from its all-time high, if not a little bit more. So it is going to be enticing, especially to the big end of town. Maybe want to see it do a little bit more, close it a bit higher, and maybe start forming some higher bases and higher lows, and perhaps it's...
So hang loose, but that's what we're saying, right?
This is a good lesson, isn't it, in a way, because it's about learning to stack up. What are the odds in the favour of it going up? So then just looking at all of the things. So he's looked at the fundamental side of it. Now it's about looking at the chart and saying, okay, what boxes can we tick? And there's still some more that need to be ticked.
Correct. Well, now we have a text, and this one is from David, and if we can bring up Min onto the chart. So while I'll read this, he says, Happy New Year, studio. Looks great. Thanks, David. I'm really happy you liked our new studio. He says, I'm currently holding Mineral Resources. He entered on a trend line. It's down 13% since entry. Should I exit at a 15% stop loss during the week or on the closing price for the week? Regards, David. Now, Janine or Phil?
Do you want to handle this one?
Okay, this is a really good one, and I'm enjoying this question, so really good thought process there. Look, looking at the stock, it's actually down so strongly, so we've seen 3 weeks down in a row right now. It doesn't look great for him right now, but I'd be thinking just wait, because at the end of this week, given it's the 3rd week down, sometimes we can see a bit of a sell-off. They push it into the
3 weeks
low.
down's not much, is it?
Yeah, they push it into the low, and then you might get the close up on the bar at the end of the week. If that happens, then I would just hang tight and wait and see if it starts to move up again.
Okay, Phil, close below the stop loss on a day, or by let the week finish and if it closes below it on the week, sell on the Monday.
Look,
David needs your help.
He does. It's look, I'm sure David's got his own rules in place there. But look, I wouldn't be, like you said, I wouldn't be too early to pull the trigger here, because there has been 2 occasions on the weekly chart in particular where it's found support at this $56 level. So perhaps wait and see what happens if it does go back down to those levels, and yeah, maybe not just pull the trigger yet.
Don't pull the trigger yet. So stick to your rules.
Yeah, stick to your rules.
A little bit more conservative on the stop loss.
Oh, for sure, because I mean, look, the month before's been fantastic. It's had that huge close from 60 all the way up to $70, and as he said, it's broken a trend line. So we are in the early stages of a potential reversal. And what's important, you've got to remember, anytime a stock is at these reversal points, it's not always a clean reversal.
Correct.
You're going to get moves up and down, and there's going to be some funny business floating around there. So this could be just one of those moments. And look, if he sticks to his rules and just keeps in mind that $59 level, don't be too soon.
Don't be too soon. So stick to your rules, Dave, and it's great you've got your stop loss on there, so that's fantastic to hear you doing all that. Now, our topic for tonight is what we believe is the key to the wealth of every Australian. And what do I mean by that? Well, to build real wealth, you must know what the future holds for bank stocks. Now, it's quite simple. When bank stocks grow, we have the greatest opportunity to grow our own wealth. Now, as promised, we'll reveal whether you should buy or sell bank stocks right now. Before we get into the stocks, Janine, I know you've got some commentary on the performance of the major banks, which I'm sure you're really keen to share.
Well, you know me, and happy to. I found this interesting article on Ernst & Young's website, and it says the major Australian banks have posted strong full-year earnings despite highly competitive pricing during the year. Cash rate rises and the net interest margin peak flowed through to higher revenues. These increased earnings also underpinned improved return on equity for the banks.
So what you're saying is the big banks are strong.
They are indeed. So it doesn't matter what negativity's out there at the moment. At the end of the day, it's the results that count. And the banks have proven that not only are they delivering to customers in terms of to shareholders in terms of their returns, because I know you have a personal view about what they're delivering to customers.
Well, correct.
But they're delivering great returns to shareholders. They've just had a record year, so
I love to hate banks.
Well, I'm the opposite.
You hate to love banks? No, I love to hate banks. But we also have a graphic from the University of New South Wales, I believe, or their website, on the financial or the final numbers for their performance last year. Now, Phil, how about you share those numbers with our viewers?
Sure. Yeah, look, the big four banks reported a record full-year profit of nearly $32.5 billion between them, and this was up 12.4% compared to the previous financial year. So the best was no surprise, and this was CBA, who posted a profit of $10.2 billion, NAB was next with $7.7 billion, then ANZ with $7.4 billion, and lastly Westpac with a profit of $7.195 billion. Chump change.
Chump change. So basically you can say that all the big four did really well last year. That's what you're telling me.
Yeah, they did. And I mean, look, it's funny, we were speaking about this off air. I can remember from however long I've been looking at the TV that the banks are reporting year on year record profits. So they've definitely got a good business model.
What makes me smile is the fact that the banks, if you look at the last couple of results, they all come in about the same level. So you just wonder, did they all sort of say nudge, nudge, wink, wink, what are you going to post this year? We don't want to be less, we don't want to be too far away from the action.
It's always CBA's a bit more than the other three a little bit less, but they generally, and it's also sometimes you're like, well, hey, we'll take this hit, but we'll go and do this, we'll take it ATMs out, we'll take the hit this time, you take it next time.
Well, yeah,
and it's like they're in collusion, aren't they?
They are. It's really exciting actually to see these results come through, and I'm liking the fact that we haven't seen this sort of action since 2017. So they took out the record from 2017 in 2023.
They took out the record, so that's for their profit. That's what you're talking about.
That's exactly right.
Yeah, I mean, because obviously for about 5 or so years they were down from 2015, March 2015 to 2020 they were down 30 to 50%. The last sort of couple of years they've sort of been coming back a bit. Combank's at record highs right now, but some of the others aren't. So we're going to get your opinion on what your favourite bank is and whether we should be buying them. So get ready for all of that. But they do say a picture tells 1,000 words. So how about we get into the charts to examine the big four banks to give everyone an idea whether it's time to buy or sell. Now, Phil, you're first up.
My favourite. Yes. Yeah, look, let's start with CBA. What do you reckon?
Oh, look, I can't say no to that.
I was going to vote for alphabetical, but start with CBA, the biggest, that's fine.
Yeah, I thought we'd put it in preference of the big boys. So yeah, look, it's not hidden knowledge. I like CBA. The stocks literally on the month of December made a new all-time high and closed above that level. So for me, anytime a stock is in blue skies, that's really, really exciting times. And like you said, there's been all this talk of recession and property prices falling and all this kind of stuff. And you look at a chart and CBA is making all-time highs.
So just explain to everybody why it's exciting to see a stock go through its all-time high from a trader's point of view.
Well, for me personally, anytime I'm seeing negative news and price doing the exact opposite.
There's some more upside likely.
Well, yeah, and particularly with this stock, it's been pretty much mirroring the market, if not leading the market. It's had that big accumulation period over a few years, and now how strong December was and the way it's poked its head out. I know you've got some markings on the chart here, which
markings, scratchings. This is special information.
Yeah, look, it is. You're right.
It's too early to fight with Phil.
What do we?
We're just getting to know each other again, aren't we?
Yeah, that's right. Yeah, what do we call these things? The price projections. The price projections, which as the guys can see on the chart, it's the 100% comes to mind off the top of my head. There you can see that each rise has been about that, and there's been a pause following, and we've had the pause following, and now are we getting into that new big run up?
Well, look, I'm really excited about it. Like you said, we've had these big runs, but because we're expecting a bull run from here, and we've been saying this for a long time, the market's been sideways for 2.5 years. You said it yourself. We thought it was going to take off 6 months ago, and it hasn't. So it's like it's really wound up, and therefore we're expecting more, upside to come. And I think that when you look at Commonwealth Bank, it's a classic example of how that works. So out of some of these lows where you get 2 or 3 really good years up, look at that 168% rise there prior to the GFC, but even the short rise that happened after that, 150%. After we got the correction, the tsunami in 2011, the market then took off again, and really, I'm just to widen that up a bit, 128%. Then after COVID hit, 105%, but is that over? Well, I sort of liken this rise out of the COVID low to the one that occurred after the GFC in terms of the form, the sideways activity that happened, a protracted sideways move, and what happens after that. I'm not suggesting 128%, because if we look at the chart and we see here $170, that would be like the stretch target that we'd be, anything's possible.
It is possible, right?
but it'd be a huge target. I'd say that I'm really quite confident about 120 to 130 for CommBank and possibly 140 odd as well.
All right, so I'm sure you got. So what's the next bank, Janine?
Okay, so Phil, I know that...
We've had Phil's favourite.
Yeah, Phil and I talked about ANZ as well. ANZ's, same with the other banks, aren't they, Phil? They're a lot choppier in terms of the sideways activity that we've seen over the long term, and a lot of investors got stuck because if they bought prior to the GFC and they held those stocks, they really made nothing over the long term.
Yeah, look, and it's showing up in price, you know. It's this one in particular has just been going sideways over the last couple of years. It's had that fall from the all-time high, and I mean, comparing it to CBA, what's interesting for me is that, you know, some people will look at this and think, oh, I know we've had chats before, and it could be an opportunity because it is lagging the CBAs, and, you know, people looking for value, saying, okay, why is this one not performing as good as CBA? Perhaps the market hasn't priced in the future value, but to me, it could also indicate that this stock is where it is because it's not performing. So,
well, see, there's all this question about the moment about Suncorp Bank. We want to see that deal wrapped up. You know, I've been quite vocal about that one. Hopefully, if that gets underway, we could see ANZ go up to around $30 in the not so distant future. That's what I'm expecting. But again, if we go back and we look at the rises that ANZ's had over time, and what, Phil, you probably have seen yourself and are interested in too, is that back in 2003, ANZ actually had a minor correction. You know, when other stocks were having significant corrections into that low. And so out of that, we've got this huge rise, 111%, but funnily enough, out of the low post the tsunami, we got the same gains to the all-time high. So there's this repetition here between Commonwealth Bank, ANZ, and you're going to see it in the other banks, that we see these sort of gains out of these major lows. What was different here was through the Royal Commission, where, you know, we knew that we're in the thick of it at that point, and we only got a 50% rise here once the sniffing, you know, the dogs got out there and they sort of started selling it off. But 110% again out of the tsunami, out of the COVID low. I'd be looking for sort of at least the 50 out of this recent low that we're seeing now.
yeah, look, I mean, so I guess what you're saying is if the news isn't negative, then there's no reason why this stock can't really go up. And what I'm really taking from all this, particularly the bank stocks, is they cop a lot of flack from particularly short-term traders that there's no growth, there's no volatility. But, you know, these stocks run 100% plus when they do run. So they're a great option. And look, you're right. If the news can bode well for ANZ, that there's no reason why it can't, you know, shoot up to that $36 mark.
And the funny thing is, they're a trading stock, as we've seen, you know, so it's just clear when you look at the chart. As you said just then, these runs out of some of these lows, 4 or 5 months, you could have a really good rise on them.
You double your money, more than double your money.
All right. What's the next one? Who's going to...
All right, Phil, do you want to go for the next one?
Yeah, sure. CBA and ANZ, what's next?
Now, NAB's next. And for me, look, NAB's in a similar boat to ANZ. The price chart isn't as sexy. Can I use that word?
That's fine. You can say sexy on the show. It's okay.
It's a bit
I
more
talk about love when I'm talking about stocks, and I get excited about charts, so go for it.
It's a bit weird calling a chart sexy, right? But look, NAB's... NAB again, it's one of those stocks that's been lagging, a lot of sideways action. People looking at this, again, like we mentioned, it's sitting at around 50% of the all-time range or thereabouts. So look, it could appeal to someone looking for value. For me, it's just a bit too choppy, and it hasn't shown what something like CBA has shown. You know, I've seen CBA, amongst all the bad news, show that it wants to go higher, and the buys are definitely there. Here, I'm not seeing that on the big picture.
You're pushing the CBA really hard.
I know.
So you want it to go up. What do you reckon, Janine?
Look, I actually like NAB. I think from the point of view that it was the dog of the bank stocks,
wasn't it? It's very much win-loss ratio of about 50-odd%. Like for a calendar year, 50%. You flip a coin, is it going to be up this year or down?
Exactly.
Now, it's been better the last 10 years. I think it's about 60-40, roughly the last 10 years, but still not really
Well, it
great.
actually really performed well out of the COVID low. A lot better than we expected it to perform. And so therefore, I'd be expecting a further move up from NAB. look, I've got some markings on the chart there for everybody to have a look at. Scratchings,
So now you're
did
calling
you say,
them
Phil?
markings.
Scratchings, yes.
Yeah.
Scratching.
I'll make sure I never say that again.
Okay, out of this low, I like that basing pattern that we've seen here with these lows there. I'd be expecting it to go somewhere between 36 and 38. Once we get through that high there in April 2022, then we know it's going to be a good run for NAB. But one of the things that I love, you know how we talk about stock market corrections and how we usually see a zigzag correction down, which is what we expected when COVID hit.
Yeah.
But we got a V-shaped straight down and then almost
I know,
straight back up
surprised
again.
every single analyst on the planet. It's just the punters got it right and we all got it wrong.
Well, there you go. And it happens. And then, with this scenario with NAB, just looking at the chart there, you can see that there is this zigzag correction down that COVID actually helped that unfold. So that's part of my attraction to NAB at the moment as well. So, look, I just think with banks at the moment, you can't go wrong with them at the moment. The only warning I would give people is that don't think that when banks continue to move up that you can just hang on to them forever. It's not going to be another V-shaped recovery on the next one, let me assure you, because long-term cycles dictate a bigger cycle's coming in and that will happen eventually. But hey, we could be wrong about these bigger cycles. How do we know that?
We could be. We're not normally wrong too much, but obviously the COVID low that we got that wrong. We thought a zigzag and it just V-shaped, but 1 time out of 10 we get it wrong.
Well, you've got to be careful anyway.
You do have to be careful,
time.
but you are right. Bank stocks aren't buying hold stocks like they were in the 80s and 90s and early 2000s. Since the GFC with the Royal Commission and all the things that are happening, they're very much over 20 years, you're going to be the same price. They're going to be doing that. So last stock, Westpac, what do you love? All
right, Westpac actually is, Phil and I were talking about our preferred stocks, and Westpac actually is my preferred at the moment.
Okay, boxing gloves are out.
Looking at that. I am going to suggest that if Westpac goes up and we, at the moment I really am liking how it's unfolding. I just want to see it get through this high here, 24.50, to make its next move to sort of cement for me that we're more likely to see it continue up into this first zone between around $27 and $30. But did you notice how the number $30 was mentioned? 30 was mentioned a few times over different stocks.
Yep.
There's this sort of theme here about the value of these companies that's very similar. So look, a previous all-time high was back here. It was a GFC high. I'd be expecting it to come up and challenge that high as part of this rise and possibly go through. And there's my stretch target up here, about $35. It'd be nice to see the banks sort of kicking those goals over the next couple of years.
Any last words, Phil? I mean, I know this is the time to fight. She's going Westpac, you're CBA.
I think I'm going to agree this time.
Really?
Yeah.
So you've changed your mind from CBA?
You're liking the scratchings.
Look, I'm loving CBA, but this one's quite interesting also because it's not as choppy as ANZ. You see it trends a lot nicer and it's definitely forming a pattern, if you will, in recent history. I like the fact that it's come and tested these lows back in December 2008 almost exactly, and it's bounced off there. So that's telling me that that 2008 low is a significant low. And look, like Janine said, that the market's poking out now, and this one, I don't mind.
Okay, so
Fantastic.
CBA, Westpac, we love. NAB and
ANZ needs to close that deal
they're
with
sort of
Suncorp
like
Bank.
Stay calm and be British and wait for a little bit for those ones. That's what we're talking about with those two.
Yeah,
Yeah?
Exactly.
Alrighty, now to wrap this bit up, if someone currently holds bank shares, what should they do and how many banks should they hold? How about you go first, Phil?
Look, if we're talking about somebody with a balanced portfolio, 10 to 12 stocks, I would say holding any one of the big four. Obviously, you know what my answer is, but any one of the big four would be a great idea. 20-30% of the portfolio, and then maybe hold 2 of the big four if you like, and then for a bit of diversification, go and look outside. Go and pick maybe one of the Bank of Queensland's or Suncorp's, one of the smaller banks, because sometimes these second-tier banks tend up outperforming the majors. So I don't see any reason, but to skew, own 4 stocks. Now you're looking at the potential of your portfolio being 40-50% weighted in one sector,
in one
and that can be
sector.
dangerous.
Yeah, that can be
That
dangerous.
can be, however, it depends on the timing and the cycle. So, you know, in the current cycle that we've got right now with this bullishness, it's less risky, I think. You know,
Yep.
if we were coming out of a correction post the GFC, where you get a lot of that, you get the wake of these big corrections, then I could see that sometimes you could get another you know, subsequent correction to that if something was going wrong in the banking space and one of the banks, you know, our banks are pretty tight and we're pretty well protected here in Australia, so we think. You know, however, you can't rule anything out when you see the likes of the GFC that happened and what
No,
could
you
occur in
can't.
future.
So again, talking about being active, making sure you're not buying and holding the bank. So if you're holding
You
extra
could
banks,
still
make sure
hold
you get
three
your stop losses.
banks. I mean, I'd be quite comfortable in this climate to hold three banks.
There you go. So you've heard it from Janine. Now I've got one last question. Should investors reshuffle their portfolio selling some stocks at the start of the year, because we're at the start of the year, to free up some capital to put into other sectors? If the answer is yes, then what sectors?
Well, there's got to be rules around that, first of all. I mean, the first thing is to make sure that you're not just selling something because you're just bored with your portfolio and you want, you know, to see something else
A lot of
go.
people do this. You know, January hits, they rebalance
Yeah.
their portfolio, or they shuffle some stocks around, sell stuff, buy stuff. So we're saying, should they be doing it right now?
I'd say have proper rules around why you're doing it, first of all. And because if you've got stocks that are going up, why would you just sell them off if they haven't given
I
you any
agree.
rules to sell?
I agree, Phil.
Yep, look, I totally agree, and you know, sometimes people can get caught in the trap of just chasing the highest earner for the month or the highest earner of
Correct.
the year, and you know, sometimes getting late to the party is not always a good thing. So,
Well, you can't buy yesterday's return. So looking at last year's biggest winners and then buying them for this year and thinking they're going to do the same thing is probably not a smart move.
it's not smart, but you'd be surprised how many strategies revolve around that.
The only exception I'd say is if somebody has gathered, you know, some stray dogs and cats, and so their portfolio is this hodgepodge of lots of different stocks, and they've got too many stocks, then I would say there's a, you know, yes, definitely clean it up. This is a good time to get it all sorted out and fixed up.
All right, so what we're going to do now is go into the sector charts, aren't we? And going to have a look at some different sectors. These are your preferred sectors, aren't they, Janine, for this year?
Well, first of all, if it's
And next
all right,
week, sorry, before you go on, next week we're going to have a show on the sectors. We're going to go deep dive into them anyway, but these are your preferred.
So first of all, if we can have a look at that, what is it, materials, I think was your favourite, wasn't it?
Yeah.
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 So if we have a look at materials first, perhaps.
Sure, yeah, let's look at materials. I mean, I like materials just with everything that's going on around the world. You know, we've got, there's a lot of talk around commodity prices going higher and higher with the wars and all the things happening around the world. And, you know, obviously BHP is a big player in this, and we've had the materials sector, if we zoom in on the chart, if we look at the monthly chart, we've seen the materials sector sitting up around that all-time high above 19,000. December closing above that high. So obviously January's had a bit of a pullback, and that's not uncommon because it is a more volatile sector. And with such a strong move, it's not uncommon for stocks to pull back. I'd like to see it hold around 18,000 just to give us signs that, you know, the strong move up there is being supported and the pullback is really just a pullback. But if price were to start falling below 17,000 there, I'd start getting worried. But I mean, look, it's been going up, it's consolidated, it's had another run up, so I'm quite bullish on it.
Yeah,
Right.
okay.
Next sector?
So this is one really that investors could have as well as short-term traders. That's what you're saying. Go for materials type stocks.
Absolutely, because like we said, a lot of world and economic events are leading to higher commodity prices. So
Excellent,
All right,
I
Janine,
like it.
Next sector.
Okay, now my next one is the healthcare sector. I'm rather partial to the healthcare sector. So you can see on the left-hand side, I've got the monthly chart now showing. So long term, we can see that it has nice trends. We know that this is a more defensive sector.
Yep.
However, we've seen these huge rises off the bottoms of other likes of CSL and other healthcare stocks. Sonic Healthcare hasn't sort of made the move that I was looking for yet. However, Cochlear took off through the blocks. It went through its all-time high. In terms of the index itself or the sector itself, I'd say this is going to be one that's going, if the market takes off, then the healthcare stocks will take off usually, because that's one of the growth areas that usually follows a growing stock market.
And we've already looked at ResMed, and that looks pretty awesome at the moment, doesn't it?
It does, doesn't it? That's one that, you know, is on the top of the list, isn't it?
Well, it is, and it's a sort of ResMed. Can ResMed be sort of a barometer for the healthcare sector, or is it more CSL and Cochlear?
Look, I'd say the biggest stocks definitely are the barometer, because CSL's the heavyweight, but then you wouldn't discount the other ones as having that sort of, you know, eye into what's going on in that space.
Well, that's what I was asking. Do you sort of stick with the CSLs, your Cochlears, your ResMeds, or do you go to some of the lesser known ones in that sector and take those?
I'd say that that's a really good idea, just to look a bit beyond. Probably I'd look at the top 20 by market capitalisation and just have a look through that lot and see how they, you know, whether there's something that looks attractive. I'd just put them into a workbook and then flick through.
Cool. All right, now the last sector.
The last sector we've got, what do you think,
look,
Janine?
I'd actually say that we could look at energy. So there's a number of sectors that Phil and I both like.
Yeah.
You know,
Don't say all 10 of them.
We were talking about energy. I mean, you've got your own opinion on what you like in terms of the sectors on the market, but I think the tech sector is going to be one that we need to keep an eye on as well. That has to be, you know, make its comeback.
Yes.
You know, we've got NextDC, you've got XRO, really great stocks that you ought to have on the watch list.
Well, and you got Appen that's just lounging down at no man's land, been going down for years. I mean, how far is that going to go?
Exactly.
And when's it going to turn around? Because it's in a pretty exciting area, but there's so many tech stocks. Tech did really well though last year though.
Well, that's right. But, you know, I mean, when there's a boom, there's more. Where's the money flowing? It's flowing into AI and all of those technologies at the moment.
So maybe we do a show on tech stocks in the near future. What do you reckon?
Oh, I definitely think that's on the list.
On the list. All right, well, that is it for our topic tonight. Now, we've still got plenty of emails and stocks to go through, but before we get into these, for those watching on YouTube, you can watch all of tonight's show plus the exclusive content on talkingwealth.com. So head over and grab your free 7-day trial. Talking Wealth members get our in-depth approach to lots more stocks and answers to more questions. Now, the big bonus is that you get to also watch my weekly Australian stock market report, where I share my views on the market and some great opportunities. Now, on top of that, you get hundreds of amazing interviews with industry experts from around the globe. Now, this is all on talkingwealth.com. Now, in our last show, we mentioned that we had a Christmas present for you, our viewers, and so we created a special free membership on Talking Wealth for those who are not yet subscribed. In this membership, I curated some of my favourite interviews and put that into the free subscription. Now, this membership includes full episodes of this show from December, plus several of my weekly stock market reports. And I've also included interviews of experts such as gold and currency expert Dana Samuelson. Now, you can still access this free subscription. All you need to do is simply click on the link in the description below on YouTube and supply your name and email address. Now, you can keep your credit card in your pocket as there's nothing to buy and it is totally free. Now, this free membership will only be available for a few more weeks, so get into it as soon as tonight's show is finished or you will miss out. All you need to do is click the link below this video in the description. Now, moving on, we'll get into some more questions. So now's your time to pick up your phone and give us a call on 039290 9988. That's 03 for Melbourne, 9290 9988, or you can text the number on your screen. Now, whilst we wait for your call, let's get into our next email. Now it's time we get into our next question, which is from Lily, who says, "Hi Dale and Janine, if it is possible, would you be happy to talk about carsales.com? I bought this stock last week, but then saw a negative prediction of its 2024 earnings of 48% in value investing. Now I'm wondering whether it's worthwhile to hold it or sell it before it falls too much. I appreciate your comments in your show. Many thanks, Lily." Car sales, Janine?
Okay, Lily, fantastic question and a really interesting stock. And it's just great to see some diversity in the sort of questions that are coming in, the stocks that are coming in tonight. So car looks terrific. It looks amazing in terms of having gone through that all-time high back in September 2021. a nice strong rise out of that, a bit of a consolidation, and it's kept going. But the question right now is, given the negative report, is this the wrong time to be buying the stock? And look, I don't think that you can say that at this point. There's nothing on that chart to tell us that it's going to turn around and come down just yet. So I guess, you know, she's probably a bit concerned. You see things all the time coming out about, you know, updates on companies and their performance, and then analysts weigh in on that and create the negativity, and sometimes that can cause the share price to go down. But at the moment, it's holding up.
But just an announcement on negative earnings doesn't mean it's not going to grow into the future, does it?
True.
It's about, we're buying future returns, not yesterday's returns.
Yes.
And so that's what we've got to look for. So Phil, what do you think on car sales?
Look, I agree 100%. It's definitely showing the exact opposite of what's being reported. So it's running up in all-time highs. We can see that this stock, when it runs, it does run, especially post 2015. We've seen the volatility increase a lot. And what I'm finding quite interesting here is that if we focus in on the weekly chart, around November, we've had this huge spike in volume. So that's coincided with the price rises. So I don't see any reason right now to be fearful.
So we're telling her nothing to worry about. Hold your position and you're fine.
And have a stop loss in place.
Make
That's
sure you
the
have
main
a
thing.
stop loss in place. Well, Janine and Phil, we've got our first caller for tonight. Welcome to the Australian Stock Market Show. You're on with Dale, Janine and Phil. I believe I've got Chris there. You there, mate?
Yep. Hey, how are you all?
Well, welcome to the show. We're fantastic, and thanks for being our first caller for 2024. So well done.
Okay.
You got a stock for us tonight?
I do. I wanted to see if you could have a look at Macquarie Group for me, please.
Okay. Do you own it, or are you looking to buy it?
Looking to buy it.
You're looking to buy it, and is there any reason why to buy that stock?
I don't know, just like the look of the way it's sort of been trending up for over a decade now. Take out the COVID little hiccup, and looks pretty good, and it's had a bit of a pullback the last sort of couple of years, and just hoping that it can reverse that and start shooting up.
Fantastic. Short, medium, long term? What are you looking at?
Probably medium term. As long as it still keeps heading up, I'll hold on to it.
Wow, fantastic. I love your call on this one, but we're going to throw to Phil to bring up his thoughts on Macquarie Group. Thanks for calling in, Chris.
Look, thanks, Chris. Thanks for the call. I really like this stock too. You've picked a beauty. This stock,
Norder, I reckon.
Yeah. Look, it's right up my alley because as we know, stocks, they move up, they move down, they move sideways, and when they're moving sideways, generally there's only one or two things that they're going to do after that. They're going to go up or they're going to go down, and this one's had a really nice accumulation period. It's had a fantastic December. I really like the basing pattern it's made. It's formed those lows at 160. It's popping its head up now. From a technical perspective, you could even argue that this resembles very much a pennant pattern. For our students there, they would know. I really like this stock. Yeah, look, it's I'm not sure what he's thinking about, whether he wants to buy right now or perhaps.
Well, I mean, that's the thing.
He's
Is it a buy right now? Is it a next few weeks,
was
next
he
month?
thinking? I thought he had the stock and he was going to keep going until it until it told him otherwise. But I actually think it looks great too, Phil. I agree with you. And look, just looking at that high there, January 2022, it looks like Macquarie keeps going the way that it's going, that we could see it take out that high in the near term. At least this one here in the short term, the high of 195.75, and then once it gets through that, we'll have a fair idea about what it's going to do to challenge that high. But I like it as well. Yeah, great.
Fantastic. Well, if you want to be like Chris, make sure you pick up the phone and dial 9290 9988. So get into us, and I believe we've got another caller on the phone. I believe. Welcome to the Australian Stock Market Show. I believe we've got Yas on the line, have we?
Hi, how you going, guys?
Good, mate. I said to
Hi, Dale.
Janine earlier today, I bet you your mate Yas is going to give us a call. And she said, I hope so, otherwise I'll hunt him down.
Oh, I did not say that.
Hope you had a good Christmas.
I'm still waiting for her to call me to sign me up for the advanced course.
Oh, really?
Oh, well, there you go.
I'm
That's a
happy to
challenge
do
for
that.
Janine. So I heard you're a tough one to call.
I look forward to comparing notes and sharing ideas.
Cool. So what's your stock for us today, Yes?
It's just CPR. It's the copper, pretty much the copper price.
Yep.
Now, I remember calling the uranium one back in May on this show,
Yeah.
and that worked out fine. Now, CPR's got a monthly trend line breakout, and I've got all my copper stocks, copper watch list, RRG graphs already. So I just want what it seems to trade good on the monthly trend lines.
Yep.
Just wanted your thoughts on what you think that commodity is going to do.
So you're waiting to buy in?
Waiting to buy in a few stocks,
All right.
leverage off the copper price.
Fantastic. Well, they've got the chart up now, yes, so they're going to have a chat with it, and Janine's going to call you in the next couple of days, okay?
Now, yes,
No,
I'm really disappointed, right? Because I thought that you were watching our show every show, and I know that you're an addict of our show, or one of them. But I just wanted to say to you that we did a show on copper.
We did.
So I'm really excited that you're asking about it. So you've got to check that out. Just have a look on. I know it's on YouTube. I'm not sure if was loaded up to Talking Wealth, but just have a look for that, because I get excited when I see this chart too. So well done in picking that.
All right.
And just looking at the monthly chart of the copper price, you can see that it's just consolidating really nicely there. I know Phil will get excited about that too, because it's one of those sort of nice in-check consolidations that you'll see on the chart there. But it looks like it's poised. If we see a move above the high of December 2023, I think it's going to take off from there. And I'm fully expecting, given where we are in the whole economic cycle right now, that this will move up.
Fantastic. Phil?
Look, I just like the fact, Yaz, that you're looking at futures prices and to give you an indication of what stocks you're looking to
That's
pick in the
smart,
future,
isn't it?
because that's not a basic idea, even though it sounds like it. Good stuff, mate. Well done.
Yas puts a lot of work in, and he does put a lot of time in. He completed our diploma last year.
Yep.
So I'm not sure who his assessor was, but they were just impressed with him, and Janine and I have just been impressed with him as well. The work and dedication he's put into making sure he gets it right. So and studying, and he rings up pretty much every week, doesn't he? I mean, he's in Perth, isn't he?
Yeah, when he rings in, and I know there's going to be a good stock, so that's
it
always
is,
exciting.
and it's all well thought out. And it's interesting when we do get students calling into the show. We know if they are a student, we pick it up pretty quickly by how they're asking the question and what they're wanting to do. And Yas is one of those. So you're both bullish on copper and looking at the copper stock, because I think copper is in every single thing that we use in our life, pretty much between phones, computers, cars, power lines, cables, you name it. It's probably in watches and underwear, if you probably, I don't know.
And look, for anyone who's not a student, it's really important to always have a stop loss, as you hear us talking about. So it's about having a plan A and a plan B. So if it goes the other way, it starts to fall away. Say if the copper price gets below this low here, and I'm sure that Yas has already got that marked on his chart, then you know that it's more likely to fall away for a while. But even if it does that, it'd still be nice, wouldn't
Yas
it?
has got it under
set
control, I can guarantee. Well, anyway, let's get on to our next question, which is from David, who says, thanks for your show. Will the US dollar index and the AUD USD bounce off resistance? If so, where and when? David, now normally we do not cover commodities or stocks, or not so much commodities, but currencies on this show. It's normally the Australian stock market show for stocks, but because we've got Phil is our FX expert, trading full-time trading FX for over 5 years. So this is over to you, Phil. You better impress them with your knowledge.
Look, David, you're lucky, because when this question was brought up, it was a no from the beginning. But look, it's passed through, and look, I've had a look at your chart, and we had a look at his chart of where he drew that horizontal line, and we've got it drawn now on the weekly chart there. If you focus on the AUD USD, and look, first off, I have to commend David on actually finding a level of resistance, which it is a level of resistance. So good on you for that.
Yep.
His question was when and where will it turn around?
Yep.
What I think David might be asking is, how will I be able to confirm that this level will be a resistance? That's what I'm getting from this. And look, to be respectfully honest with David, horizontal lines and support and resistance are Probably the more on the basic side of analysis that one can do. It's stuff that people learn, and doing it right is a completely other thing as well.
Well, yeah, knowing it and doing it
that's
are
a
two
really
different
good
things.
point.
But I know it's something that gets shown a lot, and people tend to look at it and think, oh well, this must be a turning point because it's hit there in the past. But if I don't know if David's a student or if he's looking to be a student, but I know Module 2 would help David out a lot, because we've got techniques in there that talk about confirming and how do you confirm a reversal, all these kinds of things. So I think the question that he's asking can really be helped by him looking and getting some skills, because they're out there. The techniques are out there to be able to confirm highs and lows much better than just thinking if it's hit a level of previous support and resistance.
Well, let me ask you a question, Phil. Having traded FX for a long time professionally and earning a living from that, would you used to use support and resistance for trading?
No.
Not for your buys and sells?
No, not for my buys and sells. But and look, there's a million trading strategies out there, but specifically what David's asking is, how do I confirm with a high degree of probability that this time will be the reversal time? And we're not even going to go into advanced
and we
techniques.
can't do that anyway.
There's a whole bunch of advanced techniques in terms of time and price to be able to do these things.
Correct.
Because you can do them. You can pinpoint with high degrees of certainty when a stock will reverse or where it won't, where it will just touch a little and shoot back through. Or currency, yes.
All right. All right, well, let's move on. We do have another phone call on the show tonight, so it's running hot at the moment. Welcome to the Australian Stock Market Show. You're on with Janine, Dale and the fabulous Phil over there. Who have I got on the phone? Is it Harren? Is it?
Harren, yeah. I'm calling from Brisbane. I know you talked about previously about the core lithium, and I'm actually stuck with that stock. I bought it last year, May, $9, and I got about 50,000 stock.
Okay.
And
so you bought it $1.09. You've got 50,000 units of it, and you bought it May last year. Did you say?
Yes.
Okay,
yes.
fantastic.
I know, but I'm actually. I thought they got a new project. There's a new lithium project at Darwin, the BP33. They recently suspended that project on 22nd of December. They announced it. They're not going to go ahead until the lithium prices go up. So I'm just don't know what to do, whether keep it or I'm going to have a big loss on that stock, like nearly $40,000.
Wow. Yeah, so, I mean, the guys have got it up, so they'll have a look at it. What was your intention in the first place? Was it like a short or medium and long term?
Just for a short term, and I was a bit new to the stock market, and I don't know why I bought that stock.
Okay.
Yeah.
Have you read my book yet?
No, I haven't.
Okay, it's still available for free. My first one is still available for free on our website. You just got to pay the shipping. So some of the stuff in there would have helped you protect your money, and you wouldn't have lost $40,000. And the $9 to get it to your house would have been well worth the effort to get it and read it.
But you only know what you know at
Correct.
the time,
At the time
when you
you
buy
only know what you
something.
know,
And everybody was getting into lithium.
Yeah, they were at the time.
And so it looked like, he could have been right. And it was actually starting to move up around that time and looking interesting. So,
all right.
That's tough, isn't it?
Thanks for the call anyway, Harren. The guys have got it up on screen, so they'll answer all your questions anyway. But hopefully it's positive news for you. I'm crossing my fingers for you. But thanks for calling into the show.
All right then. Thank you very much. Thanks.
Phil, I know you're sitting there waiting to help him out.
Look, Harren, I don't mind your entry price. I mean, if I was looking at this stock, it's pulled back to around 50% of its all-time range, and
good place to enter.
It popped up. So, I mean, from a technical point of view, I don't hate the entry. I think it's a nice entry. Where, the issue is here is there's no stop loss.
There's no stop
unfortunately,
loss.
And look, it's one of those things. We can do the best analysis on a stock and have everything, crossed and dotted and think that it's going to do what we want it to do. But the reality is it may not. It may not.
Correct.
And if it, these situations happen, it's very important that we have a stop in place. And I think his only mistake is, and it's probably not even his mistake because he doesn't even know, but if he had a stop, he could have avoided all that.
Should he exit or should he hold on to his position? That's really what he wants
good
to
question.
know.
Look, right now it's fallen so much. It's almost, if he's willing to hold. I mean, he's down $40,000, and I know $10,000 is not chump change. I keep saying that word, right? But I mean, it's fallen so low. It's almost near the all-time lows. It's you probably don't. You're not going to lose too much more if at these levels. What's the worst that can go to zero?
So does we put a line in the sand now at the moment, or what does he do?
I mean, personally, I'd probably hold and hope that things turn around. I know Janine's drawn a nice trend line here on the weekly chart. And so, yeah, unfortunately, Haran, you're stuck in what we call no man's land.
Yeah, it's a tough place to be. So I do really feel for you, Haran. But that is it for our take on Core Lithium. Now, remember to hit that like button and show your support for our channel by clicking subscribe. It really does help others find our channel, and so we can help them too. Now remember to show your support for us by commenting below this video after the show, because we really would love to hear your favourite part. Now also remember to give us a big thumbs up. It helps new people discover these videos. Also take up your free Talking Wealth Christmas bundle right now by clicking on the link in the description on YouTube. It only takes 30 seconds and we promise it's going to be well worth doing. That is it from us for our YouTube video viewers. For Talking Wealth subscribers, stay tuned for the bonus content we promised. Next week, we've lined up an awesome show for you as we get into cheap stocks and multi-baggers. So make sure you join us next Tuesday night at 7 p.m. Australian Eastern Time. If you love this show, then show your support for the team that puts in the effort to bring it to you each and every week. Give them a big thumbs up and subscribe to our channel. That way you know when we go live or put up more content. As always, thank you for joining us. For now, goodbye, good luck, and good trading.